Hi, and welcome to this week's episode of Money with Alpha. I'm very excited today to welcome Cassie Dittman. Welcome.
Thank you, Alpha. It's wonderful
Ca-
to be here.
Yes. Oh, I've been looking forward to this, and I am going to do a little bit of reading because I have your bio here. So I will introduce you formally, and then we'll just get stuck into some conversation piece because
Yeah.
Cassie and I have met through Mums and Business Networking, first of all, and then now we're in the same sort of coaching mastermind group. And it's such a wonderful connection when you get to sort of go on a journey with somebody with their
Yeah.
business and you hear about their life and all of that too. So Cassie founded Grow Well Financial. She also works with her husband, which is something I was like, I couldn't do that. I really admire that. And she created the brand with the goal of helping empower women take control of their finances, to feel understood and heard within financial transactions, and to support those that desire more stability and growth from their money. And she wants to turn what can be an overwhelming process into a transformational experience that leaves her clients in control and with a true sense of financial wellness. Oh, I love all of that. So, in your own words, I mean, this is all tremendous. And how are
Yeah.
you seeing it play out? And how did you get into this space in the first? I know there's a little bit more in the bio you sent me, but I'd love to hear it in
Yeah.
your own words, your journey.
Yeah, absolutely. Well, thank you, Alpha, for inviting me on to share my story, and also give your listeners some little tips. But I started working so I've always loved numbers. Numbers is something that just makes sense to me. And so leaving high school, studied business and accounting, but worked out very, very quickly that I could absolutely never be an accountant. I did like work experience with my auntie who was an accountant, and oh my gosh, I talk way too much for an accounting office. And so while I was studying, I actually got a job in the bank. So I've worked in one of the big four banks in Australia for a really long time. And that was kind of the breadth of my career. And the joy of banking is that you get to use all your finance and accounting knowledge,
Mhm.
but you get to talk to people
Yes.
most of the day. So it's brilliant. And the other great thing about working in a bank is that you get exposure to lots of different types of um, aspects of the financial, like financial management. So I spent some time in private banking, which was really excellent, and then spent a lot of time in retail banking because that's
Mhm.
kind of where my heart was. So in retail banking, you do get to deal with clients,
Yeah.
mums and dads,
Mm.
people who are starting their own businesses, all like kind of the breadth of clients,
Yeah.
and your ability to really help them
Yeah.
through some really big decisions that they've got in their life. I often say to clients, even now, that when they are buying a house or they're borrowing money to buy a business or start a business or expand their business, some of the biggest decisions they'll probably make in their life and some of the biggest things they'll ever spend money on in their life. And it's really cool to be part of that journey.
Yeah.
Also, put them up, like set them up for success with it as well. So there's
Yeah.
really simple things that you can do when you're borrowing large amounts of money that make a huge difference over the 30 years that you have that loan.
Oh, that's exciting. We will explore those. But yes, I wanted to touch on that. It's an interesting sort of phenomena in this world. Like I've only ever known one person who saved up her entire life, and then when she retired at 65, she bought a property with cash.
Oh gosh.
Yeah, I know. I was at the time, I don't think I really understood the significance of that. But
Yeah.
when I looked back on it, I was going, wow, that's a ton of discipline that she had because a lot of us
Yeah.
don't. And we don't necessarily have the time to wait. And also, you would have seen, I'd like a little bit of your perspective on this too, like the property market is
Mm.
just going nuts. You know, the
Mm.
prices, if and I think there's a lot of FOMO that goes with it as well. If I don't get in the
Mm.
market, I'm going to miss out and I'm never going to be able to afford to go in it, even though it doesn't feel affordable now.
Yeah.
How do you see that kind of mindset? Because as a like a homeowner,
Mm.
buying into a home, it's a very emotional thing. Buying an investment property should hopefully be less emotional because it's
Yeah.
through an investment. But when you're
Yeah.
buying a home, so you've got emotions, but at the same time, you need to try and get a good deal, and you need
Mm.
to sort of make sure you're not overpaying either the on the loan interest and also for the property value.
Mm.
What's just to explore that a little bit first, how do you see that sort of behavior, the beliefs, the mindset, and all of that play out in your interactions with your clients?
I think the biggest thing for clients that I work with, it's about not like it comes back to knowledge is like that knowledge is power.
Yeah.
And so really positioning them well with the knowledge and the data that supports those decisions that they're going to make. So we always start with what it is that they want to achieve, what is the goal that they have, and it can look like, I mean, I spoke to a girl just this week and talking about what her goal with regards to their first home was, and wanting a bit of a backyard and it needing to be a house, and like how many bedrooms, and getting a good understanding of what that goal looks like,
Yeah.
what sort of areas they're thinking about, but then supporting it with the data
Yeah.
that brings that back into reality,
Yeah.
and really having a conversation about if that's realistic
Yes.
from an affordability perspective. So no point buying a house and having this wonderful home if it's not affordable for you.
Yes. And
Yeah.
clarity is a really interesting one because that is like the first step for everything. What do you want? Why do you want
Yeah.
it? I,
Yeah.
I explore that with my clients all the time when it comes to the money. Like, what do you actually want money for? And I think most people just haven't thought about it because they're like, well, A, they just go, well, I need money. We all need money, don't we? But why do you want it? And same
Yeah.
with property. Oh, we all have to buy property. And you're like, well, what do you want it for? Like, what
Yeah.
kind of property? I
Yeah.
I had a friend years ago who bought this amazing big fancy house, and then after about 6 months was actually quite unhappy. And I was like, well,
Mm.
what's the matter? You've got this amazing big house. And she's like, well, it's just the three of us. It's too big. It's too
Yeah.
much to take care of, and I don't have a garden. And I was like, did you want a garden? And she said, yes, I'd really love to have a veggie garden. I was like, did you know that when you bought the house? And she's like, I hadn't really thought about it. So I think it was just such a
Yeah.
mechanical, like they were looking at so many other things, but not the ultimate, well, what do I really want?
Yeah.
So
And
I
that
love
happens
that
so
you
often,
help people with
actually.
that.
You'd be surprised how often people buy things and then they come back and they go, actually, this is not really what we had in mind. Or they buy what they think they want, but then they work out it's really like what they have to give up to have it is not worth it.
Yes, and the stress and pressure, I've seen that
Yeah.
happen as well, where they've overextended themselves. And I
Yeah.
remember talking to someone once, she was literally like sweating, and
Mm,
like shaking with, the pressure of the debt that they were under.
mm,
And I was like, whoa,
yeah.
okay. So I was like, you definitely need to like refine. So having somebody who works in the finance space who's actually compassionate and thoughtful
Mm,
in that way is
yeah.
really important.
Yeah, and that's probably one of the. I mean, you asked me why I started or why I got into it, and that is probably one of the biggest things. Having worked in finance for such a long time,
Yeah.
in retail banking, there is quite a lot of women, but
Mhm.
as the further you get up in finance, the less women there are, and we bring a different element to the conversation with clients. So one of the reasons I started my own business was really to have a place where clients could feel heard. They could feel like what their goals and their ambitions was key to what we were delivering,
Yeah.
rather than it being the other way around money and transaction being
Yeah. So you
the
sort of
primary
advocate for
key.
them if they can't, or
Yeah,
help them
exactly.
clarify what
Yeah,
they want to.
yeah, yeah.
Yeah, that's awesome. So, is that why you then started your own business, is to have that sort of flexibility and freedom to work with the sort of clients that you wanted and to be
Yeah,
able to help?
absolutely. So I was totally twofold. At the time of starting my business, I had a very young family and I definitely wanted to not be working 60
Yeah.
hours a week. So that was definitely in there. But at the time of starting the business, I was sort of reflecting on, did I want to stay in finance?
Yes.
I I'd gotten a package from my employer, which was wonderful. And so I did have an opportunity to sort of go, well, is there something else that I'd like to do, having worked in the same industry for 20 years?
Yeah.
And actually, I went through a bit of a period of like self-discovery. And I came back to, well, I actually love money and I love helping clients. And I just want to do it my own way,
Yeah.
really. So then
Yeah.
I started my business and I haven't looked back really.
Yes, it's interesting that the identity we have as a woman changes so much when we have our first child that you're kind of like, I don't feel like I'm the same person anymore. And it's amazing how many life, career, business pivots, changes, rebirths I've seen as a result of that. And it's
Yeah.
interesting because our previous identity is gone. We can't be that person we used to be
Yeah.
because we've
Yeah.
got this little life depending on us. But then you
Mhm.
lose your identity at some point because you're kind of like, well, I'm not just the mum.
Mhm.
I still want to be me, but I'm not the me that I was. So who am I?
Yeah, it's something we all absolutely go through it. And even if you wanted to be what you were, you literally can't. Like it's impossible. And if you were to try and do it, I
Yeah.
think you just have to give up too much You
Yes.
have to, that you feel, I kind of get the sense that you almost feel torn in half, like you couldn't be
Yeah.
both.
Yes,
So,
pulled. I mean, I was a consultant before I had my daughter, so of course I definitely couldn't do that. There is no way I could be jumping on a plane every week and
no,
traveling places and getting up at 4 a.m. and doing this. I'd be like, oh, there was no
yeah,
way.
no,
So
exactly.
my entire world had to change and shift dramatically. Um, I had a question in my head now. I'm sure it'll come back to me.
I just think it's so cool that we get to choose that now. Like, I
Yeah,
mean, that we've got to a point where that is like you can go, okay, well, I'm going to do something different, and
yeah,
that I get the sense that that's almost seen as it's brave, it's super brave, but it
mm,
also like it there has value in it, and there has resonance
yeah.
from people you talk to who are doing similar, or
Yeah, it's
even
much more
communities.
accepted and
Much more
understood now.
accepted. Yeah.
Yeah, absolutely. That was the question I was going to ask you. How did your husband get involved with it all? Was he always in the finance space, and how do you guys work together? Like,
Yeah,
how does that
well,
dynamic happen?
yeah, we met while we were in the same bank, like banking's just in our family.
Yeah.
So we worked together for a long time in our previous life as well. So that's probably how we can work together, because we have worked together
Okay.
previously.
Yeah.
So going into, I suppose, this time round, we knew what to expect in a lot
Yeah.
of ways. Um, but my business just grew, and I couldn't. I was finding it difficult to balance the amount of time I had to spend at home with the kids
Hmm.
and growing the business.
Yeah.
And so we just got an opportunity for him to join the business. And now we kind of try and split both roles. So we
Yes.
get the best of both worlds, which is really
It's so
amazing.
special for him too, because I feel like, I mean, there's sort of a natural nurture, versus provider relationship that does tend to happen because,
Mm,
nobody else can breastfeed the baby. So there in
yes.
the beginning it has to be,
Yeah.
like weighted in the mother's side for taking care of the young. But I feel like some dads would like to be a bit more involved. But, especially if mum is not working or is working
Mm,
part-time or whatever, somebody needs to bring in more of the money. So it does tend to
yeah.
unnaturally happen. So I think it's a beautiful balance that you guys have managed to find, and it's
Yeah, and
special for both
we've
of
got
you.
two daughters, and we actually managed to do it for both. So with Lily, our first, I only took 6 months off work for her,
Mm.
which
Yeah,
was why I wanted to do things really differently when we had Ruby.
yeah.
And then Brett had 18 months at home with her when she was little. So he actually
Mm.
had more time with her when she was little than I did. And then when we had Ruby, it switched around. I had 18 months home with her,
Yeah,
not working, which was phenomenal.
yeah.
And now we kind of try and split it, because I think the thing is, because we both had that time, we both really value that
Yeah.
role.
And you
So
understood what each was going through. Because I think
yeah,
that's the other thing too. Unless you have that primary carer role where you are the point person for
yeah,
everything, if someone
yeah,
hasn't done that for an extended period, I mean, they might be able to manage it for a weekend here or there.
yeah.
But unless they do it like en masse for days and months at a time, they have no idea that
No.
pressure.
Oh
So,
my gosh. And I think as they get older, it just changes, and it gets like when they're little, like they have like basic needs that you have to fulfill on a
mm,
time, like almost like a timeline. As they get
yeah.
older, the needs change, but they're
Yeah.
almost just as demanding in
Oh
different.
yeah, and then their personalities come out as well. So it's
Yeah.
no longer I've put an outfit out for you, and you're like, oh no, no. My daughter this morning, she rocks up with a t-shirt on and her pajama shorts, and I was like, oh well, you're half dressed. She says, no, Mama, I'm going to wear these because there's no uniform at my daughter's school. So she's like, I just want to wear my pajama shorts today. I was like, sure, whatever, fine.
This is not a
So
battle
she's
we
at
need to have.
school half in her pajamas. Like, okay. They've got donuts on them or something like that. Anyway, so yeah, so the thing, yes, the conversations change.
Yeah, absolutely, absolutely.
Uh, so I know leading up to this, I asked you sort of to come up with some of the pitfalls that
Mm,
you could identify that you see happening regularly and what people could do to try and prevent them happening or
mhm.
overcome them once they do. So could you share some of those, please?
Yeah. So just to give some context, I tend to do mostly home lending or commercial lending related to property. So
Yeah,
really thinking about those bigger transactions that
yeah,
clients are going to head into. And probably the biggest pitfall that I see clients who approach us and have a goal or have a desire to achieve something is
Yeah.
that lack of preparation that
Yeah.
they put into it.
Yeah.
And so when I'm talking about lack of preparation, it changes depending on if they are sort of employed or self-employed.
Hmm.
Probably the preparation when you're self-employed is even more
Yes.
important,
Yeah.
because I say to clients all the time, like, as a self-employed person, if you're going to use a normal lender, then you really have one opportunity each year to kind of set your financials the way they need to be to borrow large amounts of money. So
Yeah.
we're
Because
talking
you
about
don't
a home
have
loan, you're
pay slips.
borrowing, yeah, a large amount of money. And you've got that one time of the year when you do your tax that kind of
Mm.
like sets the tone for the next 12 months. And
Yeah.
in 12 months' time, we'll have another opportunity. But planning for what
Yes.
that needs to look like well
Yeah.
ahead of time helps immensely. And so I do see clients that come to you and they can't do what they want straight away.
Hmm.
They need more time to
Okay.
get those numbers to be where they need to be.
Yeah.
So the preparation in that way. Also, um, the so with lending, there are lots of options, particularly for self-employed clients with regards to the way that they can borrow. But some of those ways do require additional preparation. So things like being BAS registered. So if you are going to sort of have a business that's going gangbusters, but it's early days,
Yeah.
having BAS registration, having it early on, it's really,
Yeah.
really helpful for
Okay.
exploring some of those other options.
Yeah.
Also, if you want to borrow, if you're going to need to borrow in your business, BAS registration is really important for that
Yeah.
too.
Yeah.
So that's the type of
It's a
preparation.
good tip.
And also tax.
Mm.
So having your tax up to date, paid, not outstanding, planning for that.
Yeah.
I cannot stress how important that is, I suppose, from a lending perspective, but also from a business
Yeah.
longevity perspective as well.
Yeah, man, putting money aside for tax, it's such a simple thing, but it's something I
Mm.
see that's not done well often.
Mm-hmm.
Partly because I don't think people know, well, how much do I put away? It's like,
Yeah.
well, it literally is a percentage. You just whatever revenue you have, or you can do it on a monthly profit basis and just take a
Yeah.
percentage of that and put it in a separate account. Don't even, it's not your money anymore. Put it
Yeah.
away. And
Yeah.
so that when the tax bill comes, it actually surprises me how often I have clients come to me and their tax bill is a surprise. I was like, but you're
Yeah.
doing a BAS every quarter.
Yeah.
It
Yeah.
should not be a surprise. Your accountant should be like checking in with you to make sure you're putting that money away,
Mm-hmm.
making sure that you know what your tax what you call it, your requirement is at the end of
Yes.
every quarter. So
Yeah.
it just should be a mechanical process, but it's often not because
Yeah.
we're putting everything we have back into the business. It's like, yes,
Yes.
but it's not your money
You can't
anymore,
do that.
especially if you're
Yeah.
making a profit. Yay, you.
Yes.
You
Yes.
need to be putting it aside.
Yeah. And the thing I find with business owners, particularly new business owners, where their business is growing, and where tax becomes a big issue, is where they're not paying wages. That's kind
Yeah,
of where it pops out, because if you do start to pay yourself wages, and that was one of the other tips I would have, is that knowing your numbers and having that separation between business and personal,
yeah,
super important. And a key part of that is wages. If
yeah,
you're paying yourself wages, then you'll be paying at least a large percentage, possibly a large percentage of that tax obligation on a quarterly basis. So it
yeah,
won't be a surprise at the end of the year. But I do see a
yeah.
lot of clients that don't pay themselves wages, have all messed up, and then
Hmm.
have a big tax bill at the end that then they're catching their tail. And the
Yeah,
problem with tax bills is often it will mean that we can't do borrowing
yeah. Yeah,
for
you
a period of
impact your
time.
credit rating too much.
Yeah, yeah,
Yeah.
exactly right.
Yeah, no. And in terms of like deposit levels now, because it used to always be 20%. That was
Yeah,
what I always remember. And then they had this whole low doc thing where you only had to have 5%.
yeah.
Then, we had a bit of a crash in that space a few years back and a lot of lenders pulled back. How does that work now? What sort of amount do people need to really have?
So it's just, I mean, there's a lot of these questions that it really just depends on the
Yeah,
client situation.
yeah,
As a first time buyer, really, getting to that 5% is
yeah,
is a good goal.
yeah,
There is a lot of help for first home buyers in the market,
yeah,
with the government schemes.
yeah,
In saying that, it does depend on their situation and what they're planning on doing. There is limits and caps and qualifications for those things, but that is a 5% generally 5% plus costs. So it's
Yeah.
probably more like 8% is a good goal when you're
Yeah.
looking at your first property. When you're looking at your second or upgrading properties, generally with like equity that you've been able to gain in your
Mhm.
property, deposit seems to not be such an issue. It's really that
No,
first home that is the challenge,
that's the
and
first. Yeah.
saving 20% is impossible. It's not.
Yeah.
It's like you'd almost be saving like that lady you said we used to
Yeah.
save
For 65
the
years.
65 to save your deposit now because the deposits are large. Like if you're looking at a $500,000 property, 20%, that's like $100,000. So
Yeah. That's a lot of saving.
that's well, $100,000 plus the purchase costs.
Yeah.
That's a lot of money to save. So it's not really
Yeah.
realistic.
And most properties these days are a million. So,
Yeah, exactly. So, but yeah, there's good options from 5%. In saying that, we have clients that borrow with really no deposit. There's help. Like I think the thing is it's about working through the options. So there's things like family guarantees where if you've got family members who own properties, they can help you by providing some equity.
yeah.
There's the government schemes that can help. And then there's other ways. So there's other ways that you can get in as well.
Yeah.
So
It's really good to know that there's so much flexibility and options because I didn't used to always be that flexible from memory.
there's a lot
Like when
more
I
help. There's a lot more help. And I think there's a lot more acknowledgement that first home buyers, particularly
yeah,
as the market has sort of increased, it is challenging to get
yeah,
in. So as much help as can be available to those people who are trying to get in.
yeah,
I think the biggest thing we can generally find, I tend to find once I speak to clients and we work through what they are wanting to buy, we can generally come up with ways to get them their deposit
yes.
requirements
Okay.
done. Um, Borrowing capacity is probably the key to
Yeah.
setting the limits and things like that. And borrowing capacity all comes down to income and expenses, basically.
Yes, yeah, no, and it's comes back to the money management. So this is why we sort of connected as well because I was like, well, if you can get your money management because there's so much wastage in all of our
Yeah,
budgets
yeah,
and I'm constantly reviewing out. Like I literally just did an insurance review. I normally do it in April, May, but
yeah,
this year I did it in January and I saved us over $2,000
yeah.
by
It's crazy.
making just a few changes to things.
Yeah,
And I was actually quite surprised because I'm pretty onto it but there's always fat in the budget. So it's about
yeah,
making sure that you strip away as much of that as possible without feeling like you're denying yourself too much.
yeah,
Because if you do, then you're just like being on a diet. We were talking about we start out really disciplined at the beginning of the
yeah,
day, and by the end of the day, you're like, oh, where's that chocolate? If we deny ourselves too much, then we're just
yeah,
going to be constantly reaching for the equivalent of financial chocolate.
yeah.
So it's about understanding what's sustainable so that you can then actually demonstrate that you can afford to service whatever loan that you can afford.
Yeah, absolutely. And that's probably when I talk about preparation, preparing for
Yeah.
those things, and that is about understanding your budget and looking at where you can still no, maybe not indulge, but still like have
Yes.
those
Have
things
a
that you
life.
like in there without sort of going over the top.
So just a question for me more because I'm unfamiliar with whether things are these days. Are the loan lengths still 30, 25, 30 years? How
Yeah,
and,
generally
and is
30
there a way
years
to
is
shorten it?
fairly. Sorry.
Is there a way to shorten it is my question for people as
Yeah,
well.
so generally 30 years is most home loans will be 30 years. Obviously, as you start to pay it back each year, it reduces, and that's probably one of the tips I'd say is if you are looking at ever refinancing your loan,
Yeah.
making sure you refinance it over the same term that you've
Hmm.
got your current loan of, really important. If you are refinancing and extending the term back out, all you're doing is increasing the interest bill that you've
Yeah.
got on that loan.
Yeah.
So really important to maintain as much as you can, maintain the loan term, your existing loan term.
Yeah.
With regards to shortening your loan term, there is lots of things you can do to pay off your home loan sooner,
Yeah.
and that's probably the biggest tip I have with regards to having a home loan or even a large business loan is making those small changes that can have a huge difference to the large interest bill that
Yeah.
you have on your home loan. So, for example, if I've got a $500,000 home loan at the moment, interest rates around 6.5, but somewhere between 6% and 6.5%.
Yeah.
The interest bill is probably going to be 600,000, 550, 600,000 on that
Mm.
over 30 years.
Mm.
you can heavily reduce that interest component
Yeah.
by making some extra repayments,
Hmm.
using an offset account for your
Hmm.
savings, um, and making so what I recommend is making extra payments using an offset account, and then anytime you have any money, new money that enters your household budget, so it could be bonuses, it could be pay rises, it could
Tax
be
refunds.
gifts, it could any of those things that are like unexpected. You
Yeah.
pay your home loan first. So
Yeah.
I used to personally, we used to always, like when we got our bonuses each year, which is fairly standard in finance. Most of it would go into our home loan.
Yeah.
And then we'd leave a small amount out for like maybe a treat for the hard work we've done, but we
Yeah.
always put all of that extra into our home loan.
Yeah.
Even pay rises. So you get a pay rise, lifestyle
Mm.
creep is crazy.
Yes. Oh my
Get a
God.
pay rise, work out what that is in your take home pay and pay half of it. Like you don't have to do it all. Like
Mm.
I'm not saying like put it all in there. You do deserve those little increases, but
Yeah.
put half of it into your home loan. You won't even notice it because it's new money. It's not money you're
Yes.
expecting.
That's
So
a really, really good point because I see this a lot. And yes, inflation is there, so you get kind of lifestyle creep just by the nature of that. But if you do end up with more, like I think of my 22-year-old self versus now, I was probably better at budgeting then because I had less.
yeah,
And I
yeah,
had to be better at it, even just to the point where I would go out for dinner with friends and I would actually eat beforehand and I might just have a drink there. Or,
mm,
just not that I'm saying that, as grown-ups, we certainly do. It's no longer like backpacking. It might be three-star hotels or four-star. Like you can
yeah,
still kind of keep it within your budget, but not allowing, a 10% pay rise over 10 years to actually necessarily impact the fact that you're like, oh, it's a bigger handbag. Let's put more
yeah,
stuff in it.
yeah,
Bigger
yeah.
life. Let's put more, crap in it, to be honest. I mean,
Mm.
most of the stuff I look around me, I'm going, why on earth do I have that?
Yes,
I didn't really need
absolutely.
it.
And it's interesting because I'm so self-conflicted with regards to budget. And I don't love that word. Like I've said it a
Yeah,
lot, but actually hate it. And I don't, it's not something that resonates with me personally at all.
I don't use the
I'm
word budget.
exceptionally good at paying off debt, right?
Yeah.
So I'm a person who, if I have a debt to pay, I am very good at paying that off.
Hmm.
And so I almost have to do that to get ahead.
Yeah.
Sounds like it always sounds counterintuitive, but it works really well for me.
Mm.
And then as I've learned through my career about how to make your money work harder for you, then that's when I started to do those extra things. But I'm a person who can't save. I have to just pay things off.
That is a really good because my dad is like you. And my
Yeah.
dad was constantly trying to get me to buy property in my 20s
Yeah.
to the point where he even put his name on a contract to transfer that contract to me because the real estate agent said she'd tear it up and then rewrite it for me to get
Yeah.
me to buy this unit in St. Lucia here. And I was like, Dad, I'm 20, I think I was 26 at the time. I was like, I don't want to buy a property. And then it
Mm,
took me a while to realize, and he actually said he needs to have someone to pay. Like he said, he has no discipline. He will pay a bank though. Like he
yeah.
will pay. And I was like, well, I'm actually good at saving. Like
Yeah.
when we bought our house, we had a 50% deposit and we
That's
like
crazy.
smashed that thing as quickly as
Yeah.
possible. So that's where I am. But the paying, I hate debt. I really, but for some people, it's like yourself, it's what
Yeah.
you need in order to get ahead. So
Yes.
you've just got to know yourself
Yes,
to
exactly
understand
right.
how you operate and then work with that rather
Yes.
than trying to fight against it and just do what
Yeah.
everybody else does because you think you have to.
Yeah, exactly right. Exactly right. And it's funny having worked in lending and finance for such a long time, I'm not scared of debt in any way
Yeah.
because it's so powerful. Like
It's a
not
leveraging tool.
it's a leveraging tool. Yeah, absolutely. So there's no way with my personal savings I could achieve what I could achieve if I'm comfortable with borrowing money. So getting
Yeah.
comfortable with borrowing money is a key to, I think, a key
Or
to
a
wealth
growing
creation.
asset. We
Yeah.
spoke about that before we hit
Yes,
record.
I was going to say good debt. So we talk about bad debt, good debt. I'm talking about debt where you're buying an asset that's going to appreciate in value over
Yes.
time. So that could be property, it could be shares. That's a little bit more risky, but
Yeah.
depending on the levels, it's okay. It
Mm-hmm.
could be business
Mm-hmm.
expansion, growth, like those good business ones, not cash flow business ones.
Yes. Yeah, no, it was interesting because we talked about cars because I have a few clients who wanted to finance a car. in their business, and you were like, no, I prefer to help people finance things that are going to grow in value. I'm like, right on. I've never had a
Yeah,
loan for a car. I never want to have a loan for a car.
no,
I'm content with my little Corolla. It zips around
yeah.
quite nicely.
Yeah, and I get it. Like, I mean, I help clients that run business where they have equipment that actually is a business generating issue.
Yes, of
And I
course.
get that that may be very expensive. And to make their business growth, it's got part of their growth plan. They need to borrow
Yeah.
money for that.
Yeah.
That is brilliant. You might have a fleet of cars that you rent out, and that's like that is your business, and maybe you need to borrow for that.
Yeah. Or you're a
I think
tradesperson
borrowing for
and you need
like
a car. It's like your mobile office.
yeah, exactly,
Yeah.
exactly. So I think borrowing for us like so you've just got to look at what's the purpose and what's the driver behind the
Yeah.
desire for it. If it
Yeah.
is about growth and you have a clear plan on how that borrowing is going to return more money that it's taking, then
Yeah.
go for your life.
Yeah.
If it's not, I do see like lots of clients that have lots of car loans that just hinder whatever else they want to do.
Yeah, absolutely. I have one question which comes up quite a lot that I get asked, and
Yes.
I refer people to the experts like yourself to answer it, but I'll ask it now in case other
Mm.
people have that same question, is fixed versus variable interest rates. Because
Oh
obviously
God.
there's a lot of cliffs that people have been falling off lately where they've had
Mm.
fixed, and then there's that question of now, oh, should I fix in my interest rate? Are the interest rates going to go up anymore? I think they're going down, so we'll go. There's this constant battle.
Mm.
How do you navigate that conversation, and what's your opinion on it?
Yeah, okay. So, what I would say is no one has a crystal ball.
No.
So your chances, it's not exactly like going to the casino and putting your money on black and red, but it almost is,
Yeah.
because no one really knows what's going to happen. And the other thing I'd say is lenders, banks, well, banks particularly have a whole team of people that are setting the pricing in their books,
Yeah.
and they will set their pricing so they will not lose money,
Yeah.
basically. So,
Yeah.
um, I remember back in, I can't remember where it came from, but way back in my career, I remember, I think it was when I was in private bank, they were talking about the interest rate markets and the long term view of interest rates.
Yeah.
And when you look at the very long term, um, are you more ahead on a variable or a fixed? The
Mm.
long term view is that historically people have always been better off on a variable rate over
Yeah.
the very long term
Yeah.
because of those highs and then
Ups and
lows
downs. Yeah.
in with regards to fixed. Because the problem with fixed rates is you fix in a point in time and then
Yeah.
you're stuck in that.
Yeah.
Now, if you're fixing at the moment, depending on what rate you're fixing at, you might find that over the next 2, 3 years, you might be paying more than you need to because the variable rates have dropped
Yeah.
down. So that's the period where you're paying more.
Yeah.
Likewise, we've had all these people on. I'm brilliant. I actually had a customer just last week, and they're still on 1.99, just expiring because they've been on it for 4 years. Like I was
Oh
like,
my
that was a
God.
good decision.
That was a good deal.
Um,
Yeah.
so there's those people who are getting ahead that way, but historically, long term variable is the market. You're probably going to be
Yeah.
better off unless you just make some of those really good decisions. But
Yeah.
there is absolutely a place for fixed rates.
Yeah.
And the place for fixed rates is if you are a person who needs certainty to sleep at night. So you're not trying to beat the market. You're
No.
not trying to make a better decision. What you're saying is I need certainty. It might be
Yeah.
for a time in my life because I've got all my other expenses are high and I
Yeah.
have no flexibility in my budget. I need to know what my home loan repayment is going to be and that it's not going to change. So
Yeah.
I have clients that are fixing at the moment, and it is because we are having conversations like
Yeah.
they need to replicate their home loan repayment being like a rent repayment, where it's not going
Yes.
to change. They're locked in. They know what it's going to be for the next 12 months because that's what's most important to them.
Yeah.
If that's not the case, I wouldn't be recommending fixed at the moment. I'd be saying go variable, have the flexibility, be able
Yeah.
to make extra payments. You have extra money in your budget. So that's going to
Mm.
actually do more good than bad.
Yeah.
We are probably fairly close to the top of the curve, if not at the top. It's
Hopefully.
likely that rates are going to go down, but I don't have
Yeah.
a crystal ball, so it could
No.
go the other way.
Yeah. Well, because when we did ours, we were variable, also because the interest rate was lower at the time.
Yeah.
But then the interest rate went even further down. So I was actually like,
Yes.
I'm so glad we didn't fix it
Yes.
because we would have not benefited from it going
Yes.
down. And then we were like, and we were one of those ones who were like, it's going to go up at some point. It cannot stay this low forever. So we were like
Yeah.
hammering that thing as much as possible.
Yes.
And then when the interest rates went up, everybody was a little bit shocked, going, really?
Yeah.
It
Yeah.
couldn't stay there. Like,
No,
there's
exactly
no
right.
way.
And that's, I mean, it's interesting because I tend to, and not at the moment because we are, like I said, probably pretty close to the top of the curve, but it rates historically like between 4 and 5%, that's normal. So
Yeah.
if you're on a rate or if we're in a rate environment where rates are below 3%, then you need
Mm,
to be budgeting in for your repayments to be at 4 to 5%, really, like as the
yeah.
we're at the top, like probably pretty close to the top, might come back. It's probably going to end up somewhere between four
keep
and five
keep your same
percent.
repayments. If you're used to affording them,
Oh,
just keep
absolutely.
at it.
That is
Keep,
key.
yeah. Because I
Don't
think back
reduce your
to like
repayments.
my parents, I remember when the rates started to go up, and my mum and dad were like, what's everybody panicking about? We had 13%.
Yeah,
I mean,
yeah,
admittedly, the property prices were a lot lower. This was the
yeah,
80s, but they were like, well, I don't know why everyone's panicking because we've been
yeah,
so spoiled with having
yeah.
such low rates for so long. So, and in comparison, they haven't, I mean, they've gone up enough, and admittedly, the actual dollar value is a lot higher now.
Yeah,
But
I
it's
think when you
still
look at, I mean,
impactful.
when you look at the percent, I mean, one of the measures that they will look at when you're doing lending is debt to income ratio, and it
Yeah,
is much, much higher than it has been historically. So
yeah,
people's debt levels to their income as a ratio is is
it's
is
yeah,
historically at its highest peak.
yeah,
But it is really important that when you are considering new lending that you're looking at sort of worst case scenario repayments
yeah,
and saying, well, so I might be able to afford it now, but can I afford it with an increase of 1% or 2%, depending on where we're at? And if
yeah,
that figure is looking like it would be tough, then maybe that loan that you're looking for is not actually affordable.
yeah,
Likewise, like you said, if interest rates go down, maintaining those repayments because you're already doing it will put you well ahead from paying off your home loan sooner.
yeah. Because it literally cuts years. I
Oh,
don't
it's
think we
huge.
realize it's not a matter of, oh, I'll pay my home loan off, maybe a year earlier. No, no, we're talking like multiple years and tens of
Yeah,
thousands
yeah,
of dollars just by
yeah.
paying it off faster and like little bits here and there. It really adds up over time.
Yeah, I mean, it's as simple as like, I mean, I haven't, I can't do a calculation right now, but like even $10 a month, like it seems so stupid that you'd even
Hmm.
bother,
Yeah.
but that can save you half a year. Like it's like
Yeah, well,
it's
the Money
crazy.
Smart website has some awesome
Yeah.
calculators on that.
Yes.
So I'm constantly on there with my clients going because I want them to play around with it. I was like, okay,
Yeah.
here is what this does. Look at the difference. It's
Yes. Yes.
tremendous. And
Yes.
even paying fortnightly, like there's so many little, we always think the big changes need a big change.
Yeah.
Big
No,
changes can
small
come from
changes.
little
Yeah.
actions. So
Yeah, absolutely. It's funny that you say that because every time it was like I said earlier, one of the things we used to do was every time we got a pay increase, we'd increase our home loan payments first.
yeah.
And then when I used to do that, because I was like a person who had to have reward from what I did, I'd go and do that calculation and I'd be
Yeah.
like, I just saved like 8 years of my home loan.
Yes, yes. But it's important to have that recognition because
Yeah,
without it, you just feel like, oh, this is never going to end. I'm going
exactly
to
right.
retire and still be in debt. And
Yeah,
that energy also then tends to mean that we don't stick to our budgets because
yeah,
we're like, what's the point
yeah.
anyway? Like it's uplifting to have,
Yes,
like you said, knowledge is power.
yeah,
And it
absolutely.
impacts us in such a positive way then once we know what we're dealing with, rather than
Yeah,
avoiding it, which I understand why, but it's much more powerful and productive to actually know what you're dealing with. Then you know
yeah,
how
absolutely.
far
Absolutely.
or close you actually are.
Yeah,
Often closer, funnily enough, than we think we are.
yeah, absolutely, absolutely.
So one more thing I want to touch on as well, because
Mm,
I do a lot with the mindset, and we spoke about this before we hit record, because
mm,
I kind of prepped you with the concept of like money stories and the things
mm,
that we grew up with, and we were both still talking about how you didn't feel like you had a money story, and I was like, I feel like there's this sort of expectation that we've all got to have a hard luck story or something that's
mm.
that was really bad, or there was something devastating around it, but it doesn't necessarily need to be that way. When do you first remember your like the concept of money and how did it kind of feel for you or how do you recollect it remembering what it felt like?
Yeah, okay, cool. So I don't have any bad money stories. And it's funny because I have, having run my own business, I've done coaching and things like that, and it is something that
Mm.
comes up, and I'm like, it doesn't really feel like I've got it. I've like people would tell me like write your story. I'm like, I don't have anything to write. But
Yeah.
actually, interesting when the way you asked that question. So my mother, so both my father and mother worked when I was. My
Yeah.
mother worked from probably when I was about 8 years old,
Hmm.
and then she started her own business. So she
Okay.
was a bit entrepreneurial. But around mid high school, I think, like maybe year 9, year 10, she would give us a clothing budget for the year.
Okay.
So we used to get $1,000 to spend on whatever we wanted for clothing, shoes, birthday presents if we were going to parties,
Yeah.
and we would get that as our budget for the year. So we had to make that work. And so
Yeah.
that's probably actually my earliest memory of like that money,
Yes.
being something that
Oh,
you could could use to your desire.
yes.
And
Yes.
I remember I
Within
had
a
these shoes.
certain boundary.
Yeah, I had these shoes that I bought and I just loved them. I like they were like leather shoes, but they were like brown and green and like I thought they were like the coolest thing ever. And that I bought them when I had my clothing budget because
Yeah.
they were something that I probably like. While I love them, I think if I didn't if we hadn't been given that control, I
Mm.
don't think mum would have necessarily said yes. But she was very good. She said like that's your budget, you
Yeah.
spend it. If you run out, that's it, you're done.
Yeah.
But it gave us the freedom to actually choose what we wanted to spend our money on as well, which was really
Yeah.
cool.
And I think that that level of, I mean, this to me, money is choice. It's
Yeah,
not good or bad, it's not judgmental at all. We judge ourselves in
yeah,
relation to it, but money itself is agnostic
mm,
in that regard. But it's interesting because whenever we go on a holiday somewhere, I will give my daughter a certain amount of money.
yeah,
She gets day-to-day pocket money and she can add to it. There's certain tasks she can do to add to it. But if we go on like a big holiday, like for instance, we're going over to see family for a month and I'll give her some extra pocket money for
yeah,
that. But I was like, that is it. You should,
yeah.
I've never seen her so like picky about what she spends it on. And then she's like, but then she starts negotiating. She's like, well, Mama, if I get this, and could you pay for this bit? And I'll pay. I'm like, no, that was your money. I will pay for an ice cream a day and your
Yeah,
food, and that's
yeah,
it.
yes, yes,
Anything else,
yes,
an entry to things, but
yeah,
anything else you want, you've got to buy out of that
yeah.
money. And
It's
it's really
interesting that you
interesting
said that
watching
because
the decision process.
we were just in Thailand for Christmas, and I did exactly the same with my daughters. I gave them 300, they had 300 baht each
Yeah,
basically, and that was their spending money. And I hadn't really bought them anything else other than like just the normal food, things like that.
yes,
And then this one day I said, okay, you're going to get 300 baht and I'll take you to the markets and you can buy what you want with it.
yeah,
And I have one daughter who will ask for things everywhere we go. Like she
yeah,
wants things everywhere we go. And
yeah,
I give her $300. She found it so hard to spend that. Like when it was her choice and
yeah.
it was her money, oh my gosh, it was like she was parting with her like hard-earned dollars. And then my other daughter, who really doesn't ask for anything, she found it very easy.
Oh,
Really interesting to see the difference
the
in
personality.
personality
This
types.
is that whole like nature nurture thing. People are like, oh, it's all, nurture. I was like, well, no, some of it's nature. You can have two children brought up the same way in the same
Exactly.
household, same
Yeah.
gender,
Yeah.
because, genders do tend to make a bit of a difference. And I was like, and
Yeah.
you'll see the difference. Like it's
Yeah, yeah.
tremendous.
It was
Yeah.
really interesting to watch actually.
Yeah.
And then probably my next money thing, and it sticks in my head, and it's almost like a pivotal moment, was when I was about 25 and I was working in private bank at the time. And I was starting to work with clients who were really, really comfortable with borrowing money and
Hmm.
borrowing money to make money.
Yeah.
And that was a really pivotal, and I can almost pinpoint the moment in time where I was like, I get this. And it changed my life, basically.
Yeah. Yes, it's very much when you sort of when I first read Rich Dad Poor Dad,
Yeah.
I think is when I had that revelation because I didn't get that message growing up.
Yeah.
My dad was a small business owner, but for him it was more like self-employed. Like he just bought
Had a
himself a
job.
job,
Yeah.
basically.
Yeah.
A well-paying job, but still a job.
Yeah.
And my mum was a school teacher for
Yeah.
most of her career. So it was, yeah, it's a concept that when you get it,
Yeah.
It still has to be aligned with your values and clarity on what you actually want as your lifestyle, but
Yeah.
it's an important one to get.
Yeah. Absolutely.
Oh, fantastic. So how can people find you? How's the best way if they want to find out more and potentially want to work with you? How can they do that?
Yes. Okay. So I'm on everything.
We'll put
Facebook,
all the links in.
Instagram, LinkedIn, at Grower Financial, basically.
Yeah.
That's the same website.
Yeah.
And just reach out for a chat. I think the big thing with any finance, and you would be the same as this Alpha, that planning piece is
Mm,
huge. So
yeah.
having a plan, even if it is a future goal,
Yeah.
knowing what you need to get there is power. So
Yeah.
honestly, I don't mind talking to people really, really early out into their plan. If they have an inkling that this is something that they want to achieve,
Yeah.
reach out and let's put a plan in place around it. It might take you, I have clients that I work with for like 2, 3. I've only been in business for, it's coming up 4 years, but I have
Mm.
clients like
They've been
literally
there.
starting to like,
They've been on the journey.
yeah, exactly. So it
Yeah.
is a journey. It's like I said, it's probably one of the biggest things. Buying a house is one of the biggest things a person will ever
Yeah.
probably buy. It
Yeah.
does take time, and knowing what you need to do to get there is key.
And that's such a refreshing thing to hear someone who works in the finance space say, because very much it's very transactional for I think
Yeah.
most
Yes.
brokers. You want a loan, let's have a look. Because I remember just as a sort of as extra segue or sidebar was when we
Mm.
were getting our home loan and we had a neighbor who'd just gotten into mortgage broking. So we're like, oh,
Mhm.
we'll give him a go. Maybe we can go with him. He'd brought in his sort of senior, I suppose, to help.
Okay.
And I said, look, we really just want a no frills loan,
Yeah.
low fees, no exit fees, just as low interest rate
You
as
want to be
possible.
able to
Just
smash
yeah,
it out, smash it out.
simple. Yeah, so we can smash this thing. He came up with a loan we could split 10 ways. We could do all it. And I'm there just going, I'm sorry, are you listening to me? I'm like,
Oh,
no, we have a
no.
boat. I don't want a jet ski. My car's fine. I just want the house, like
Yeah.
literally. So in the end, I was just like, I said to the, I was like, I'm really sorry, but unless you can help me with that. So we just went off on our own and did something. But it's really,
About a simple
yeah.
loan.
So having that clarity and having somebody who actually listens and
Yeah.
supports you on that journey, I think is tremendous. So thank you so much for being that person.
No, that's okay. I love it. It's like helping my clients is my favorite part of my job. So
Yeah,
that's
I can see
awesome.
that. Fantastic. And we'll put all of the links and everything in the show notes so that you can, if you're driving and you can't write them down, you can still find and talk to Cassie.
Excellent. All right.
Thank you
Thanks,
very
Alpha.
much.
Great chat.
Yeah, it has wonderful. And everybody enjoy the rest of your week, and I will talk to you again next week.